and working on fixing credit.
Absolutely,
You know,
absolutely.
so
Yeah, it's one of those things that you just never know when you need it. Whether it's an unforeseen medical circumstance, maybe you crash your car, things like that. So it's the student loan forgiveness. You know, so there'll be some good info for sure.
yeah, so Biden just said that he's going to relinquish some debt for folks out there who need help, and it's
Yep.
for if you make 125,000 or less. Um, I think the first question I have is just like how does an individual who qualifies, or a married couple, how do they access this?
So there's actually an application you have to fill out online. The application is specifically for student loans, as well as grants that someone may have received. If you are qualified under $125,000 to get anywhere from $10,000 to $20,000 principal payment on that loan. I think the important thing is, even though that is fantastic, I think the important thing to realize is that the monthly payment of which the student loan servicer is allowed to charge is actually being reduced to only 5% of your income. So, quite frankly, before this change was made, sometimes it doubled that, sometimes it tripled that. So, this should be allow, the average consumer with medical debt to actually make those payments going forward. If you amortize out a loan and that payment is 3 times as less as it once was, it's going to definitely give some really big relief.
So do you think that there's going to be a lot more spending after people utilize this forgiveness?
Truthfully, you never know how the consumer is going to work. It's great to have everyone have a little bit of extra money in their pockets. I do think it will affect credit positively in the fact that people are not going to be overwhelmed with their debt just kind of being an avalanche of an insurmountable amount that they can kind of crawl from underneath. So now with these changes, they're really able to allocate some of those funds in which they're saving each and every month. Maybe to a principal payment there, maybe put it towards rent, things like that, so on and so forth. It just I understand speaking with clients that have credit challenges on a regular basis. Sometimes the student loans are the last thing they're worrying about. Also in regards to student loan debt, it's going the deferment, the forgiveness is going to start in January. So they're going to start the ball now, but the accounts are going to be in deferment until 2023. So they're not even. So gives you another 4 months to, start saving, start getting all your ducks in a row, things like that. It is an advantage though for a consumer to actually make a principal payment to their debt without actually having to gobble up that payment with interest. So we are advising folks that do have the means to make the payment still. Get paid down that principal balance. It's a great way to sidestep some of that in interest.
Right. And I know you guys told me to go ahead and not only make payments, but to ask for some type of assistance, right? Because they have this thing with student loans where they will forgive your late payments, they will forgive all this stuff and restart you over, right? As if you just got these loans and start making payments. So I thought that was great for people like myself.
Yeah, I think it's something that a lot of people, a lot of students don't realize that if they are being inundated with late payments, their student loans fall into collection status, there is a rehabilitation program offered by the Department of Education. Just got to call back into the U.S. Department of Education, ask for this it's called like a rehabilitation program, where if you make 9 consecutive payments under a new reamortized monthly payment, they'll lift all of that derogatory information, and not only will get that consumer back in the good graces of the servicer, but it also increases their credit score as they start lifting some of these questionable accounts.
And credit score opens up opportunities. Um, do you think that this will cause trouble long term in the economy, being that there's so much lifting of debt from the consumer? Of course, obviously, people are going to spend more, their credit score is going to go up, they might actually obtain more debt. But do you think that that will affect the economy later on in the future?
It's really really good question. I think the best answer is time will tell. I think if people that are in a situation in which they've been overwhelmed with student loan debt, if they don't take this and run with it in a positive light, meaning that they're going to handle things responsibly with outstanding debts. It could go awry very quickly. Again, there is a tremendous amount of student loan debts that's not out there, and a lot is being forgiven, but it's not washing everything away completely. So I know oftentimes we're seeing things in the media. There's often spin zones of what's really happening. There's going to be a little bit of a forgiveness, anywhere from $10,000 to $20,000, but that does not, by any stretch of the imagination, wipe away all of the consumer educational debt by any stretch of the imagination. So I think I think it's something that we'll have to reevaluate probably. Honestly, probably around Q2 of next year. We'll see what it looks like.
Yeah, because will this stuff start taking effect immediately? Like if you apply for it?
Yes, yeah. So you can start applying for it now. There are applications on the government websites to poke around there. Um, when they're going to start distributing funds, the funds, quite frankly, are not going to go into the consumer's pocket. It's just going to go to the servicer. So if I'm sitting there with $50,000 of an outstanding balance with U.S. Department of Education, I fill out the application. I am approved. Hypothetically speaking, if I looked at my balance, let's just call it in 30 days from now, the balance instead of being 50,000 should be 40,000. So I don't want folks to misinterpret it that like they're going to be expecting a $10,000 check that they can go do whatever with. It's being sent to the servicers directly.
Of course. And so, like, is this going to be a dramatic change in people's credit scores? Like, if you're at like a 550, are you going to be at like a 750 overnight?
That's a good question. Unfortunately, not. That's not by the way it really works from an algorithm perspective. Um, Educational loans are considered installments, and the balance to limit ratios are not affected in installment loans. Same educational loans as would be on an auto loan, on a mortgage, things like that. Where you do see score increases from a balance to limit ratio perspective is going to be on the revolving debt side, i.e., credit cards. And that's where you'll see really fluctuations as balances are reduced. But quite frankly, I think this is going to, give the consumer a lot more confidence in with what's going on in the credit world, specifically folks that were affected by student loan debt, and allows them to, again, reallocate funds that they may have elsewhere to maybe pay down a credit card, pay off an auto loan, things like that, get back on time with a mortgage they may fell behind on because now their student loan payments are not becoming an avalanche of debt.
Right. So basically helping the consumer focus on what's important in the
Exactly.
meantime, and then get back to paying with those and dues. Credit care,
Yeah.
what can they do to assist in this process of, getting people not only familiar with the program, but, helping them get assimilated, right? So that we can continue to work on their credit and
Yeah.
bring the access.
Yeah, I think we do some fantastic things on the consumer credit side. I think to me, the one that resonates the most is really being that trusted advisor. We have an education-based platform in which we're always trying to keep our consumers informed of what's going on in the credit world. Oftentimes, as you know, there's a lot of misinformation online in the news, things of that nature. Having a trusted source to gather pertinent information to rectify a certain specific situation and quite frankly, offer that financial freedom that I think the average Joe or Jane is always looking for. That does have credit hiccups or credit challenges.
Right.
Um, that's going to be our greatest selling point. Again, fighting the good fight for the consumer at a credit bureau level. That's why most people come to us. But I think it's really the partnership that we have with our consumer base on keeping them up to date with information that affects them on a day-to-day basis. Because credit is one of those fickle things that folks don't really know about. It's a conundrum that most can't unbox. So with that being said, having a regulatory organization like ours that really does a lot of handholding with our consumer base, I think that's ultimately going to be the most vital part of a person really taking back their consumer credit health.
Yeah, you guys definitely hold hands because you guys have been holding my hand, and I'm like, oh God, thank you so much. I mean, I know I pay for the service, but it's great to have somebody call you and check in with you uh, about your credit, about what's going on, and make sure that you stay on track. And I think my next question really just goes into the future, which they're saying that social credit is going to become more important than actual credit. And so if you don't have a social credit imprint, right, a social media or you're not treating people well online or whatever it may
Yeah.
be. How do you think that would assimilate into the business that you already have, number one? But what are they going to do? Do you imagine that they're going to use their current credit score, your social credit score, and combine the two? What do you foresee in relevance to social credit?
Yeah, there's such a shift, not only domestic but globally with influencers, social media, Instagram, Facebook, things of that nature. But I can tell you there's one thing that is a bigger entity and has been around a lot longer is going to be the banking institutions. And I can tell you definitively they do not like change, especially when it comes to risk analysis of a consumer. So though that in hindsight there might be a scoring model for social credit and that nature, it's really going to come down to the financial institutions and the governing bodies in which they are implemented under to really make that sort of change. In hindsight, it sounds like a wonderful idea, but knowing that the banking institutions are so set in their ways, oftentimes it's quite difficult to see changes from a scoring perspective as well as a lending perspective. Because at the end of the day, they're private institutions, correct? You know what I mean? They have the choice to lend you money or not. The scoring system really is them really assessing the risk to lend you money and ultimately the ability for you to pay that back. And
Right.
oftentimes they don't like to rock the boat on any of the implementations or the measuring sticks in which they've set forth.
Man, and it's a tough thing. Like if you're an entrepreneur out there, I know, and I'm sure that you know, like how tough it can be to build credit from nothing. Especially business credit, which
Sure.
basically is assessed based off your personal credit. Um,
Yeah, right.
so you really have to work hard out here to make these relationships and pay your dues.
Yeah, absolutely. I think you hit the nail on the head. But I can tell you this, as much as that people think sometimes it is insurmountable to reestablish credit, sometimes it's awfully, sometimes it's doing things such as like opening a couple secured credit cards, making some on-time payments, getting current with your student loans. They're not asking you to spend $1 million a month to pay it off. Quite frankly, sometimes it's like a $300 credit card limit, putting a cup of coffee on it, paying that balance down, and doing it for 6 consecutive months, and that really ultimately starts to build your consumer credit profile. On the business side, due to the credit crunch, what transpired in 2008 and 2009, oftentimes banking institutions are looking for something called a personal guarantee. But that's really in the infancy of a business, right? Once you become established, year 3, year 4, year 5, once you have true balance sheets and revenue coming in, things of that nature, oftentimes you can exclude yourself off of a business loan. But yeah, at first they're going to want you to stand behind it, because if you kind of go belly up, they're going to come after you. So it
Yeah,
is important to have all your ducks in a row on your personal credit side.
I thank you for your time. This was great. And I look forward to passing this along to not only my personal community on YouTube, but the billions of people that are on YouTube. And hopefully they can
Yeah,
gain some insight
yeah,
on what
yep,
decisions they want to make going forward concerning
yeah,
their credit.
absolutely.
There and they're a great company. I mean, I use them personally. Um, they're not that expensive, and it really, you really need that care. You really need somebody to back you up when it goes into fixing your credit. You have to really outline your plan. What is it that you want? A home, a car, business loans, etc. And National Credit Care will help you get there. So Anthony, I thank you so much for stopping by.
All right, thank you so much. Appreciate it.
Okay, bye.
Good deal.